The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.
Welcome to Honest Money. It's the first episode of the year 2025. And so I thought today we'll cover a little bit about what happened in 2024 and then give you some thoughts about the year ahead. And also just give you a little bit of background as to what's happening at Honest Money. It's a year of change and growth for Honest Money, and I think there's some exciting things happening there. So first, let's kick off with what we're doing in Honest Money. We've decided to add a lot more written content to our website. And so we've recruited a very experienced personal finance editor and writer to help us with some more written content. And those articles will start going out in January. So we'll be doing quite a few articles every week. And I would suggest that you go and have a look. You can see our website at honestmoney.co.za. It will be great for you to start getting a bit of additional written content. It will be very different from what we're covering in the podcast. So it's not that you'll be getting the same content online, in written and verbal format. We'll be giving you double the content in different ways. So for those of you who like to read and may not like to listen to the podcast, please go have a look. And if you want double the content, then you can read and listen to us at your leisure. And so maybe just also on the podcast itself, we're going to be doing a lot more video content and trying to add a bit more kind of professionalism to the video setup. We're realizing a lot of our listeners don't just listen to us, in audio; they watch us on YouTube and other platforms as well. And so we'll be beefing that up through the year. Our following episodes will be a bit different to what you're seeing now, and so give us your feedback there. We love to get your content and your questions and your ideas. So please keep sending your questions to us, and we'll try and answer them as we go through the year. So as I said at the start, I'm going to talk a little bit about what happened in 2024 as kind of a framework for what I'm thinking about for the year ahead. And certainly last year was a big year from a political point of view. There were elections in many different countries around the world. And so, we need to know that those elections, the outcome of those elections will only really start to be felt through this year. For example, Donald Trump will only be taking power in the US in January. And already on his interviews that he's doing and his social media platforms, he's doing his level best to shake things up. And I think that sort of unbridled criticism from Trump about his own party within his own country and then other countries will continue. And his at the moment ally in chief Elon Musk is doing his level best to unsettle politicians in the UK and in Europe, and he will be a factor in their elections that will be coming in, certainly in Germany in this year. And so what we're seeing is kind of a big punishment of politicians that were the incumbents, the established politicians in 24, and I suspect that will continue into 25. At the time of publishing, the Canadian Prime Minister has resigned, and he said that he can't even get consensus within his own political party, and so it's impossible for him to contest national elections when he can't get consensus from within. And I think what we're seeing is the massive impact in the rise of inflation around the world. So what we're seeing is voters very unhappy with the state of their cost of living. What we've seen is that cost of living around the world. South Africa, in some ways, we were a little bit insulated from that big jump in cost of living that was seen in the US and in Europe, and people were incredibly unhappy with fuel prices that were up 30 or 40%. Energy costs, which is a huge factor in very cold countries, also rising by a lot, and then food prices, etc. And so the incumbent political parties were punished by voters. It doesn't mean that they were all voted out of power. So in some instances, their lead in the parliaments or their political setup was just reduced. That was certainly the case in South Africa, where the ANC, received a huge hiding in the elections, and now is the ruling party, but only with the 40% of the vote, which means that they need other political parties to get things done. And in some instances, I think that that's very healthy. Where in South Africa, a ruling party that could kind of act on its own without fear of consequence was a detriment to the country, and now there are real consequences, because the ANC, if it acts in a way that's against the wishes of the majority, in this case in the government of national unity, then it could lose power. And it's an unlikely scenario in the short term, but an extremely likely scenario in the next general election. And so I think if we're talking about politics, what I'm looking for in South Africa is to see how this government of national unity starts to mature. We've seen that political parties can have differences in the government of national unity, but still get things done. And just how they resolve their differences is important. I think it's important to understand. For us, most of us, this is the first time that we're living with a government that's not one unique body, and so everybody's going to learn as they go, and we should be conscious of that ourselves. And so when there are disagreements, the media is going to do their best to kind of blow those disagreements out of proportion. And every single time one politician in the government of national unity says something that's not the consensus, the media will be saying that this is the end of the government of national unity. And the truth is, we don't know what the outcome will be. But what we do know is that the two biggest parties in the government of national unity, being the ANC and the Democratic Alliance, are both in a situation where they want this government of national unity to work, and they're both going to have to accept that certain things aren't going their way, and act in the greater good of the country. The other side of the coin is that it's rare that politicians do the right thing all the time. Acting in the greater good of the country is a very nice thing to say, until it costs you some votes. And so we will see politicians acting in their own self-interest as well. And to me, that's the hope, is that we will see politicians doing the right thing because it's in their self-interest, not because it's good for the country, which is a bit of a cynical view. But unfortunately, politicians have taught us that they don't always do what's right; they do what's good for them. And we just hope for now that what's good for them is also good for the country. On a positive note, in South Africa, I think we've seen very little load shedding over kind of an extended period now, and the possibility that we see no load shedding into 25 is real. There might be a couple of days of load shedding here or there, but I think for most of us, we would expect that load shedding is a thing of the past, and as more capacity gets added to the grid, the chances of load shedding occurring again will just diminish more and more and more. What we're not seeing at the moment is an expansion of the grid, and that's the big thing that we need to see in the next 12 to 24 months is new capacity being added to the grid, so that we see new solar providers in the country being added, and new wind providers being added as well. And if that happens, then I think the country could be in a position where energy becomes a source of economic growth and not an economic constraint. The other big issue is Transnet, and for now we're seeing gradual moves in the right direction within Transnet, but certainly a lot of work needs to be done to get Transnet right, and to get the ports moving and expanding again. At the time of publication, there's still some court cases stopping the kind of joint venture with private operators in the Durban Pier 2, and that's extremely unfortunate, because we need to see that those public-private partnerships working much more quickly and much more effectively to get the ports unlocked. At the same time, we are seeing some gradual signs of economic recovery. Some of the listed companies that I've been speaking to are seeing early days or early signs that things are going well. It's a situation of them operating in an environment where in the past they've just had headwinds, both from government and from the economic climate. And at the moment, government is starting to get out of the way and allowing operators to actually run their businesses, but still with a lot of constraint. So I must say, I'm somewhat optimistic about the year ahead in South Africa. I think that if the government of national unity can work well, that we will see a lot of optimism. And sometimes all you need is a level of optimism for the economy to start going in the right direction. The one big thing that I am concerned about in South Africa at the moment from a political point of view is national health insurance. I think in its current form, if it goes ahead, it's catastrophic for the country. It will really cause enormous damage to the healthcare sector in every sphere. And so if we can find a way where the whole country can get access to universal healthcare without destroying the private medical sector, then I think we would be on a really good footing. And that's my hope for the year ahead. I'm not forecasting doom and gloom. I'm just highlighting the one kind of very obvious risk that needs to be resolved this year. Internationally, I think the big things that we're looking at is what's happening with inflation in the US and in Europe. Why that's important is that if inflation continues to drift down, it creates scope for the central banks in the US and Europe to continue cutting interest rates. And certainly interest rates in both those regions are still quite high and do need to come down. But there is no scope for central banks to cut interest rates if inflation stays stubbornly high. And so I think that will be the mega economic trend of the year is inflation and interest rates. If we see inflation coming down and interest rates get the chance to come down somewhat, that will be very positive for the bond market and the stock market around the world. And certainly I think a lot of investors are hoping that will be the case. A big concern, I guess, will be what happens with valuations of shares in the American tech sector. When you see a very large company like NVIDIA trading at a price earnings ratio of more than 50, just to understand that means it's 50 years worth of profits to pay for the current share price. And by any measure, that's an expensive share. And so what it means is that the share price could continue to go up through this year and maybe even into 2026. But the likelihood is that high valuations act like gravity on share prices. There will be a time when that valuation becomes so high that the company cannot keep delivering growing profits to justify the valuation. And at that point, either the share price goes sideways, drifts for a period of time, or it starts to fall. And very often it will fall because investors will become disappointed with the growth and then panic that they don't want to be the one holding an expensive share, and so they sell that share. And NVIDIA is not alone. I think a lot of the big tech companies in America are priced for perfection at the moment. Some of that pricing is justified because these are very well-run companies generating a lot of cash and their balance sheets are very strong. But I think the hype around artificial intelligence is a little bit overdone. It reminds me a lot of what we saw in the late 1990s when people started to get excited about the impact of e-commerce on business. And the promise of e-commerce, certainly was delivered, but it was delivered a decade late. And I think that might be the case with artificial intelligence. If we don't see lots of companies around the world delivering 20 or 30% growth based on savings from artificial intelligence or new productivity from artificial intelligence, then I think a lot of investors are going to be disappointed. And like anything with a new tool and with a new set of ways of doing business, it takes time for that to actually filter through the company and the consumer. And so I think, it's not to say that artificial intelligence won't be extremely powerful tool set for companies, but just that it takes time for those things and the benefits to actually realize. And so, let's watch that space. At the same time, I think emerging markets are almost universally very cheap. Some of them deserve to be cheap because they're in deep trouble and economically, struggling. But others are offering good value to investors, and I think we're seeing, some early signs of investors starting to filter money into emerging markets. And so that might be an opportunity for investors. I think my main message to you, if you're an investor for this year, is be sure to practice a lot of diversification. Don't over allocate money to one share or one sector or one country, because I think the truth is when there is so much going on in the world with so much uncertainty, we still got a lot of global conflict happening. You don't know which country and which sector will do well, and particularly which share will benefit from that uncertainty. And if that's the case, then don't take big bets on one direction. If you think the tech sector in America is overvalued, then reduce your exposure, but be careful of selling out of the tech sector in America, and then it continues to power ahead for this year and next, as an example. So I think diversification is important, and then be sure to have an allocation across all asset classes. In other words, don't just have all your money in cash or in bonds or in shares. Make sure that you spread across all of those asset classes. The bias, in my view, should be to the stock market, but that will be dependent on your tolerance for risk and your age and your investment profile as well. How long you've got to continue working, and your age is a big factor in that as well. So I think that's enough for today's episode. Thank you very much for listening and supporting us over the last year. We've seen some fantastic growth and some fantastic engagement from our listeners, and we love the questions that you send. And please go to our website to start reading our articles. We're gonna be adding a lot of great content there in the days, weeks, and months ahead. And then be sure to check out our YouTube channel as well. There are some exciting things happening there. Please keep sending us your voice notes on WhatsApp, and we'll do our best to answer them. Thank you very much.
The Honest Money podcast is brought to you by Prescient Investment Management. We consider everything to give you the advantage. It's the future of investing. Prescient Investment Management is an authorized FSP.